Ever wondered what happens to those spare pennies and dollars you round up with Acorns? It's more than just digital pocket change accumulating in some virtual piggy bank. It's a strategic approach to investing, designed to be accessible and hands-off. But how exactly does Acorns take those small contributions and turn them into potential growth? That's precisely what we're diving into today. Before we unravel the intricacies, let's paint a picture. Imagine you grab your morning coffee. It costs 1,850 Nigerian Nairas. Instead of just paying that amount, Acorns, with your permission of course, rounds that purchase up to 2,000 Nigerian Nairas. That extra 150 Nigerian Nairas? It doesn't just vanish. It gets tucked away, virtually, waiting for the right moment. Do this a few times a week, across various purchases, and suddenly you have a small but growing pool of money. This is the core of Acorns' Round UPS feature, the seemingly simple yet powerful engine that fuels your investment journey. But the magic doesn't stop at accumulating these small amounts. The real question is, where does this money actually go, and how is it put to work? This is where Acorns' investment strategy comes into play. When you sign up for Acorns, you're not just throwing your spare change into a void. You're essentially opening an investment account. Based on your financial goals, risk tolerance, and time horizon, Acorns recommends a diversified portfolio of exchange-traded funds, or ETFs. Now, what exactly are ETFs? Think of them as baskets of stocks and bonds. Instead of buying individual shares of numerous companies, which can be costly and complex, an ETF allows you to invest in a whole sector or index, like the S&P 500, which represents the 500 largest publicly traded companies in the United States, or a bond index that tracks government or corporate debt. This instant diversification is a cornerstone of smart investing, helping to reduce risk. If one or two companies in an ETF underperform, the impact on your overall investment is lessened because you're invested in a much broader range of assets. Acorns offers several pre-built portfolios, ranging from conservative to aggressive. A conservative portfolio might have a larger allocation to bonds, which are generally considered less volatile than stocks, while an aggressive portfolio would typically hold a higher percentage of stocks, offering the potential for higher returns but also carrying a greater degree of risk. When you sign up, Acorns asks you a series of questions to understand your financial situation and risk appetite. Based on your answers, they suggest the portfolio that they believe best aligns with your needs. Once your round UPS accumulate to at least 2,500 Nigerian Nairas, or $5 in the US, Acorns automatically invests that money into the ETFs within your chosen portfolio. This automated investment process is key. It takes the emotion and the effort out of investing. You don't have to constantly monitor the market or decide when and what to buy. Acorns handles the mechanics for you, consistently putting your spare change to work. This regular, automated investing, often referred to as dollar-cost averaging, has another significant benefit. By investing a fixed amount at regular intervals, you naturally buy more shares when prices are low and fewer shares when prices are high. Over time, this can help to smooth out the volatility of the market and potentially lead to better average returns. Beyond round UPS, Acorns offers other ways to invest. Their recurring investments feature allows you to set up automatic daily, weekly, or monthly transfers of a specific dollar amount into your investment account. This is a powerful way to consistently grow your investments beyond just spare change. Imagine setting aside a small amount each week. It might not feel like much in the short term, but over months and years, it can add up significantly, further accelerating your wealth-building journey. Another interesting feature is Earn, which partners with various brands. When you make purchases with these participating companies using a linked card, Acorns automatically invests a percentage of that purchase into your account. It's like getting cashback in the form of investments, a seamless way to grow your portfolio simply by making everyday purchases. Furthermore, Acorns provides educational resources within their app, aiming to empower users with financial literacy. They offer articles, tips, and insights into the world of investing, helping you understand the rationale behind their strategies and encouraging you to take a more active role in your financial education. This focus on education is crucial, as it helps users understand that investing is a long-term game and encourages patience and consistency. Now, let's talk about the underlying ETFs that Acorns typically uses. While the specific ETFs might vary slightly depending on your chosen portfolio and market conditions, they generally focus on broad market indexes. You might see ETFs that track the S&P 500 for large-cap U.S. stocks, small-cap U.S. stocks, international stocks, and even bonds. This diversification across different asset classes and geographies is a fundamental principle of risk management in investing. By not putting all your eggs in one basket, you're better positioned to weather market fluctuations. It's important to remember that investing always involves risk. The value of your investments can go up as well as down, and there's no guarantee that you'll get back the amount you initially invested. Market volatility, economic downturns, and various other factors can influence the performance of the ETFs in your portfolio. However, by focusing on a long-term strategy and maintaining a diversified portfolio, as Acorns helps you do, you can potentially mitigate some of this risk over time. Acorns also charges fees for their services. The specific fee structure can vary depending on the type of account you have. It's crucial to understand these fees up front and factor them into your overall investment strategy. While the fees might seem small, especially with smaller account balances, it's important to be aware of them as your investments grow. In summary, Acorns invests your money primarily through a strategy of diversification using low-cost exchange-traded funds. It gathers your spare change through roundups and allows for recurring investments, automatically allocating these funds into a pre-built portfolio aligned with your risk profile and financial goals. This hands-off approach, coupled with educational resources, makes investing accessible to a wide range of people, particularly those who are new to the world of finance or prefer a more automated approach. It's about consistently putting small amounts of money to work over time, harnessing the power of compounding and diversification to potentially grow your wealth. With that said, thanks for watching, and until next time.